Hello everyone. Tradewind is pleased to provide the following public awareness campaign. If you are a senior, this is vital information you should be aware of. Today you will learn about financial options that you may never knew you had. For those that work with seniors, thank you for making this time investment to better serve your clients. Bad financial decisions have caused financial catastrophes for many. Why? In many cases, it's a simple lack of knowledge or rash decisions are made because there's a lack of information. The area we will be discussing today is a financial option one has when they no longer can afford or simply do not need their life insurance policy any longer. Historically, seniors believe they have only two options: to stop paying the insurance premium and simply let the policy lapse, or take the small cash value payment from the insurance company. Life insurance companies make money collecting premiums and investing that money for the benefit of the life insurance company, not paying out death benefits. Does that make sense? They make money betting on the fact that most people will never keep up with their premiums long enough for the face value of the policy to be paid out to anyone. Life insurance companies are betting in a very calculated way that most people will either run out of money or motivation to keep paying their premiums. Therefore, most insureds or their family will never collect or be on the receiving side from the insurance company. You think the life insurance company is going to educate the public and in turn increase the amount of money the life insurance company has to pay each year? I don't think so. In fact, let me share with you some very interesting statistics and facts that will shock you. What percentage of every 100 life insurance policies will not end up in a death benefit being paid? According to the website The Complete Lawyer, 85% of universal policies will not end up in a death benefit being paid. This same website cites that over 95% of term policies will not end up in a death benefit being paid. National Underwriter magazine also confirmed this trend in a September 2004 article. The article stated that a majority of policyholders let their policy lapse or surrender for minimal cash value. The results are significant wealth loss for the insureds. Of course, if the insureds have wealth loss, that means the wealth increase is going to the insurance companies. The National Association of Insurance Commissioners in Kansas City, Missouri, also validated this issue. They estimated in 1996, for example, $1.5 trillion in life insurance face amount was lapsed or canceled. The reason for these staggering statistics we viewed is historically, insureds believe they have two choices when they no longer could afford or needed their life insurance policy. Either let the policy lapse or get the minimal cash value from the insurance company. But now seniors have an option to leverage their life insurance policy, an assignable asset, to a life settlement, giving seniors an option on policies they feel may be too expensive, poor performing, or because it no longer meets their original needs. A life settlement offer will always be more than the cash value offered by the insurance company. Based on a recent U.S. Government and Accountability Office statistic, the average lump sum payment on a life settlement offer is 7 times more than the cash value. A life settlement is simply the sale of an existing life insurance policy of someone age 65 or above on the secondary market for more than its cash surrender value. Sounds simple enough, doesn't it? Most insured people, and even most life insurance agents, know little about this valuable asset. Why is that? Well, let's look at it from the big insurance company vantage point first of all. They love collecting premiums, selling life insurance policies, but do they go out of their way to inform the general public or educate their agents to tell their client that the life insurance policy might be more valuable to the insured while they're living? The life settlement industry continues to believe that for the betterment of the consumer, the life insurance company should disclose to seniors whose policy may lapse that they may have other options like a life settlement. Unfortunately, the big insurance companies would prefer to have the life insurance policy owner unaware of this option. A Model Disclosure Act is gaining some momentum. Laws similar to this act have been passed in 4 states: Maine, Washington, Oregon, and Kentucky. The act requires insurance companies to notify senior insureds whose policy is about to lapse or who are seeking to surrender their policy that other options like life settlements exist. More and more states are considering similar legislation. I know this is hard to believe, but recently an amendment to the Washington law was proposed that would exempt term life insurance policy for disclosure. Quite frankly, the big life insurance companies would prefer to have consumers unaware of this option. They have even said that this notice is too burdensome and costly. even though it simply is a form letter. The real reason is obviously an attempt to stifle the secondary insurance market and the valuable option it provides consumers. For those of you who may have a need now or in the future, know that your life insurance is an asset. If you would like cash today and no longer want or need your life insurance policy, a life settlement may be a valuable option for you. 3 easy steps to proceed. Number 1, complete the application. Number 2, Lime Exchange Management will provide underwriting services. 3, the Lime Exchange Management will negotiate offers on acceptable transactions. Lime Exchange Management has relationships with over 20 well-capitalized funding sources that want to make offer on policies. For those of you who have a need, our experienced team would love to serve you. Thank you so much for your time today.